All right, so welcome everyone. Thanks for joining us today, and we're excited to be part of the Tech Week chats. Today we've got Fran joining us to give us an introduction or overview, I guess, on the New Zealand economy and how stablecoins work and why we created the NZDS specifically. So Fran himself, he is a co-founder of Techemynt and Brave New Coin, and has been deeply involved in the cryptocurrency and blockchain communities from the very earliest days. So he describes his mission in life as terraforming the crypto asset landscape. So I'll pass it on to Fran, who will be our speaker for today.
Thank you, Hugo, and thanks for everyone that's joining us. A few familiar names in our industry joining. It's always nice to see. So as Hugo said, I'm the founder and CEO of the Techemynt group of companies, including Techemynt, which is our exciting new venture we launched about 18 months ago. We realized there's a market need to digitize all types of value for the next decade, expressed them through various proxy tokens, and how and why is what we'll be covering today. So firstly, what's going on a super macro level? It's really important to understand. We were advised that inflation was transitionary. The reality is that we're at the end of the third and final Western central bank system. It's 109 years old. They can't really print more. They can't really raise rates too much. One would cause more inflation. The other would destroy the economy. Rampant money printing has devalued the purchasing power of major currencies around the world. So we're at the end of the latest Western central bank fiat system. Money is literally based on debt. It's inflation prone. And as we see in the New Zealand numbers, CPI is at 6.9%. And we all know the real inflation is at least twice as much than stated. The system is full of cash. It's looking for yield. So what we're trying to do at Techemynt is find an easy solution that outperforms the current rate of inflation. It is my personal opinion that things will get worse and then they'll finally get better. So what is the actual problem that we're staring at, just to break it down? The payments network currently, the SWIFT network, is anything other than SWIFT. It's slow and clunky and analog. Interest rates on deposits are much lower than official interest rates, and the trust in banks and institutions in general, globally, is at all-time lows. The system is full of cash looking for yield, but this presents some significant opportunities. So the trends that we have identified, the opportunities, is firstly, the global demand for change is exponential. Right? People want change, realizing it doesn't have to be this way. Stablecoins are unlocking the new rails and the new yields. So we've been in Bitcoin since, I guess, I mined my first Bitcoin in 2010. We started building these companies in 2013. It's been a decade since then, and the infrastructure and middleware is now scalable enough to actually disrupt multi-trillion-dollar global industries, such as FX, foreign exchange swaps. Is a major area that's being disrupted right now. So societal restructuring is paving the way for parallel economies and parallel currencies. And there's a significant lack of competitors. The incumbents are too slow. They'll probably just acquire their way into the market. So, if only there was a way to earn more interest than inflation. There is, and we'll get to that. So firstly, Techemynt's first product is called NZDS. It is a one-to-one backed token. $1 in the bank account means one token out. There's no speculative rehypothecation with the funds. We don't speculate on, dubious equities and other things when the cash comes in, nor do we practice fractional reserve banking practices in the sense that we only ever have one token in circulation for every dollar that's deposited into the bearer trust account, and the proof of reserves are audited by EY. Now, programmable money is smart money. So I want to just cover off a couple of major trends. So what is being done about it? 2 days ago, in a surprise announcement, 44 central banks descended upon El Salvador to discuss the Bitcoin standards, discuss how they can consider moving a small percentage of their treasuries into, the hardest money in existence, Bitcoin. We call that Plan B. Whether you like it or not, the world is currently restructuring, and even some of the largest, nations, asset-producing nations on the planet, the BRICS nations, have already announced that they have an alternative to SWIFT, and they're backing their currencies with things like fertilizer and gold and other hard assets. So that trend to sound money is simply going to progress and continue just for the sheer demand of it. Now, to further contextualize why we created Techemynt and how it all works, I wanted to cover off Peter Diamandis' 6 Ds of exponential technology growth. Once something is digitized, you can do things with it. It opens up a world of programmable options, right? But it's very deceptive. In 2013, 14, we were told, get out of here, you crazy kids. This Bitcoin stuff is never going to work. And then, within a year or two after that, we were invited to keynote the Payments New Zealand conference. We did an educational seminar for every single New Zealand bank's executive team. We worked with the IRD, and I'd like to think we have a helping hand in making sure that, we don't have GST tax on crypto assets in this country. But more importantly, things dematerialize, then they demonetize, and then they democratize. And to contextualize that in the sense of a stable coin, let's take a look at what stable coins really mean. Sorry, I will be jumping around a little bit. Firstly, stable coins are already huge. Most of you are probably aware of brands like Tether, maybe USDC, and maybe the Binance USD coin. There's 2 types of stable coins, ones that are hard backed with assets and others that are algorithmic and they try and retain their peg with some funky math, and that hasn't worked out too well so far. But the numbers are pretty crazy. We're already seeing market capitalization for Tether is north of 75 billion, with $58 billion in daily trading volume. USDC, 11 billion daily trading volume, 52 billion market capitalization. There's a lot of businesses that have gone out there and focused on the US dollar. And the reason that it's so adopted and so useful, even we pay a lot of our international contractors in stablecoins because it's just almost free and instant. We can send, $100 or $10 million from here to England or somebody sitting in Toronto within seconds, right? And every country in the world has an exchange where you can typically take these tokens and then sell them back for dollars and put them back into your bank account. So the world of remittance, cross-border payments, regular payments, all of that is opening up, becoming a lot more efficient with fiat currencies, dollars, being tokenized. We saw an opportunity to do this for the New Zealand dollar, and we'll probably do it for other fiat currencies around the Pacific, Australia, gold, silver, so on and so forth, as we expand our focus as well. So the current status, just to cover off where we're at, we've got about 7 million assets under management. We started 18 months ago. We spent a year getting the infrastructure together and our licenses and standard operating procedures and so on and so forth. It was only about 5 or 6 months ago that we started to actually mint some of our first tokens. We now have about 7 million in circulation, and you can take those tokens and put them on a growing number of partner platforms where people are enjoying double-digit yields, APY. So NZDS is the first use case, is a far better option than dollars sitting idly in a conventional bank account. You can literally wire in dollars, get tokens, stake them, and enjoy a yield rate that is higher than inflation. And I'll talk you through step by step exactly how that works. So we're finding interest from traders, FX traders, crypto traders, investors that simply want to take self-custody and not have dollars in their bank accounts. They have something very liquid that they can always redeem for $1 or sell on a growing number of secondary markets. Everyday users, we just had dinner last night at a presentation in Chicago, and me and the CEO of Dasset split the bill. So I just sent them some tokens for my half, and it was basically instant within a couple of seconds. And of course, remittance, and we've talked about that. So our job at Techemynt is to make the NZDS product and subsequently future products as useful as possible. So without naming names, we will see the NZDS token available within a growing number of popular crypto wallets. So they can just appear there and you can handle them with the preferred wallets that you currently use. From there, it is likely that some of our partners will have a credit card where you swipe, the merchant gets dollars as per usual, and your balance of stablecoins is simply deducted in the back end. We're already seeing a great deal of interest from trade financing. Speeds up loan settlements, payments, and repayments drastically, and removes a significant amount of costs from trade finance. So there's a whole series of different areas that we're focusing on, but we like to surmise it as centralized and decentralized. So decentralized is where some of those yields come from, and that's what I want to focus a little bit on today. And lastly, just wanted to address the addressable market. I mean, it's huge for those that are unaware of it. You know, there's already over $100 billion worth of stable coins in circulation. We expect this to continue and reach into the trillions and trillions of dollars, right? For the next decade, we're going to see everything you could imagine expressed through a proxy token simply because of the efficiency gains in doing so. USD was just a big target for many companies to go after first and foremost. We're going after NZDS to be the NZD to begin with, but we expect the next decades to be filled with demand to tokenize, as I said, all kinds of commodities and currencies. So the basics of the NZDS, I can't stress it enough, we are 100% collateralized. We do not practice fractional reserve banking practices. NZDS is minted on the Ethereum blockchain using the ERC20 standard for those familiar with that. And we looked right at the beginning for what the industry standards were. There were none. What we identified is that the company Circle, who creates USDC, has the best open source framework for stablecoin issuance and redemptions. And subsequently, over the last few months, they've seen great success in having their framework and standard, or the emerging standard of USDC, accepted by a growing number of legislators and regulators throughout the United States and Europe. So again, we're audited by EY for proof of reserves as well as our compliance processes. And NZDS is not a security. It's not captured under the definition of a security instrument. We use Minter, Allison, Rudd, Watts as our lawyers here in New Zealand and abroad. So how does it all work? Right? This is an oversimplified version, but we are happy to dive into a lot more detail. Effectively, you should get yourself an account with Dasset, New Zealand's most liquid order book exchange, dassetx.com. Once you've got an account there, you can wire in some dollars and you have a balance. And then you can buy NZDS with your dollars and a little bit of USDC. You'll need both. And then you take those two tokens, withdraw them to your wallet. Right? We encourage people to be their own bank, be self-custodial. And then you plug your wallet into our first partner is VFX.finance, and they are currently offering, this is a little outdated, it's about 28% today, which is a lot better than inflation. And then you can stake for as long or as short as you want. We call it staking when we're talking about using collateral to put it into a pool, and then your stake of that pool gets you the yield of that pool, your fair share. So you can then take that yield component, which is paid out in the DFX token, and you can sell it and compound your stack, or you can withdraw the lot, send it back to Dasset, or send the coins back to your wallet and self-custody them, depending if you want to wire it back to your bank account or not. So this really is a three-step process. Get yourself some coins for an account on Dasset, withdraw those coins and stake them on our first partner's platform, DFX.finance, and then review them daily, monthly, whatever frequency you wish. That's the great thing. Most banks in New Zealand, the best interest rate you're going to get is about 6 or 7%, and that's if you lock your money up for 12 to 18 months. It's not too attractive, especially when inflation's almost 7%. It is important to note that DFX is not our operation or platform. We have done our due diligence. We just have to stress that we looked at the code. We looked at a third party auditing their code. We're happy with the code. We're happy with the fact that the money that you deploy there is not rehypothecated, so they don't go and speculate with it. The way that the fees are generated is people are swapping NZD to USD to JPY to Euro and so on and so forth. All of those FX swaps are happening continuously, and there's a tiny bit of fee that is charged, much less than the conventional sort of SWIFT system, but there's a small fee. But because there's no humans in this equation, there's no countless middlemen, that small fee goes towards the yield, effectively. That is how the yield is generated. And so those rates will compress as people clue on that there is a new way to generate yields out of blockchain innovation. But for the time being, with only $7 or $8 million in the different pools, yield rates are pretty damn attractive. And I'm sure I'll get a lot more questions about how the yield is generated. The fun part is the questions for me in these things. I think we'll get into a lot more granular things as people churn out some great questions. Just quickly, Techemynt Capital is the sister company. We offer OTC trading. We've run funds in the past. We're a funds manager. So we've done a 5x return on our Ethereum fund in 2018-19. We did a 411% return in the 2020 DeFi fund. We do a little bit of prop trading and arbitrage that will increase as we list Techemynt and its products like NZDS on more and more markets. We would want to squeeze out the arbitrage and open up borrowing, lending. In fact, we have a second major partner that is offering yields coming online in about a month or so. And they are going to offer a set 10% interest rates. And what they do is they then market make and extract arbitrage and borrowing lending yields to cover their 10% that they're offering you. So that is a different risk profile and a different partner. And we encourage users to do their due diligence on any use. We are already seeing a number of decentralized exchanges not even contacting us and listing our token, because that's the nature of freely transferable tokens on the blockchain. So choose a brighter future, right? You don't have to suffer through inflation. There are a growing number of products and solutions available that assist everyday Kiwis being able to manage their money better than any product out of the banking system can ever offer. Our team is comprised of some of the best experts in their fields. Techemynt has a fine blend between technical, legal, commercial, and financial engineering. We've done a lot over the last 10 years. We've built a number of different successful companies. We've helped raise over $550 million between 35 different startups over the last 7 years. And we couldn't be happier working in this industry compared to anything else. So that is the presentation component of this. And now we get to the fun part of Q&A. Hugo, can I pass it to you?
Yeah, sure thing. Thanks for that, Fran. We've got our first question, actually. How would CBDC impact stablecoins?
We're going to have to see. I've sat on the CBDC steering committee. I've sat on the digital identity steering committee and all those public-private discussion forums for years now. My personal opinion is that central bank digital currencies are not a blockchain, for one. They're centralized, and they're not money, right? They're a dangerous combination of fiscal and monetary policy into the hands of unelected offshore officials. So far, the most likely scenario, if they go ahead with it, is that they will use the English design from the Reserve Bank there. And that one, basically, it's not money, it's coupons for specific things. So there would have to be a controlled demolition of the economy and complete, failure in the purchasing power of dollars for there to be such a need to replace all currencies of the world, or the New Zealand dollar. We shall see if that happens, but The idea is that you can program CBDCs. You can do things like, well, we feel like the tourism industry needs a bailout. So anybody that's tagged with a wallet in the tourism sector, let's just increase their balances by 20%. Just done. You can print money directly to a category, directly into wallets, and you can do the reverse. You can create higher taxes on a particular sector or a particular type of activity. Or we're watching central bank digital currencies closely. I'm not the biggest fan. I don't think they're required, and I'm very worried about the combination of fiscal and monetary policy into unelected hands. If I can get to this question that I'm burning to answer about how is this not a financial product?
Yeah, go for it.
So NZDS is not a financial product. We have a clean legal opinion on that. It's very obvious it's not a financial product. Where things could look like a financial product is what I just described with our partners, right? When you take the NZDS and you stake it, that may be subject to certain considerations. So far, we haven't had any grief to date. It's more about the tax question, and most people are advised, this is not formal tax advice, to go and speak to a professional, but it's likely it's just going to be treated like an FX tax consideration, if that makes sense.
We've got another question from Lloyd. So Lloyd's recently bought some NZDS on Dasset and has managed to stake it on DFX. The staking seems quite complicated and the fees were about $50. So the first question is there a tutorial that describes this more in detail? Question 2, DFX says it's highly experimental. Could you lose all your money? And you could lose all your money. So what are your comments on this? And the third question will be, is there a way to send NZDS from Dasset to DFX via Polygon?
Okay, one question at a time, but
yeah. So first question is tutorial that describes this more in detail. So that's what we're working on. And we've got anyone at Techemynt or Dasset who's willing to help people run through how to stake as well.
If you've never set up a wallet before or staked anything before, it can be a little bit daunting. So we are working on creating some content. In fact, we've got some how-to guides and videos being produced. I'm not sure if they're already live. Literally showing step 1, do this. Step 2, click on that. And the DFX system is quite nice. Like, it's very self-explanatory. It actually says, this is you're depositing here, and this is what your share of the pool is going to be. Do you confirm? But yeah, it's very nerve-wracking when you do it for the first time. So we're more than happy to help, and so is Dasset. The Dasset support team is fully incentivized to assist people in using their platform to buy NZDS and then make their way into staking. In terms of the fees, Ethereum, you will get, a $50 fee or thereabouts on the network. Really, you need to do, something like 5 to 10K minimum. But the Polygon version is something like 2 cents or 5 cents. It's very, very cheap. Now, it is subject to Dasset and its technology partner in making Polygon-based NZDS withdrawals available through their exchange. I am the chairman of Digital Asset Exchange. I'm the co-founder of Digital Asset Exchange for disclosure, but I'm not operational. My job is governance, so eyes on, hands off on an operational level. But I do have Stephen with me on this road trip, so I will ask him about that next.
Great. And then the main question, I guess, will be the highly experimental part of DFX and your comments on it.
So Techemynt is actually the recipient of one of the very first decentralized insurance payouts. It was a different network. I don't even remember which one it was. It was about 18 months ago or 2 years ago. And it was incredible because we filed our claim. Their platform went down. And we ended up with 100% of our collateral paid out to us in 48 hours. And it's just phenomenally efficient. So what I'm saying is that there's a growing number of third-party insurance providers that you pay about 75 basis points, maybe 125, depending on which one, and they will fully cover your exposure on a platform against systemic failure, platform failure. Most people lose their money because they're socially engineered. Someone will come along and pretend to be a service provider, like a wallet provider, and say, hey, we just need to verify this and that. Can you please sign this? And they do, and their money's gone. So it's extremely important to just be conscientious of, not your keys, not your coins. The great thing with DFX is when you deposit or stake onto their platform, you're returned LP token, right? You custody that IOU, if you will. And then the pool is just there to be, you're adding liquidity to make it more liquid. So larger and larger amounts of NZD USD trade can occur, and therefore larger and larger amounts of yield can be generated or fees charged through the network. So hopefully that answers that as well.
Great. Yeah, please keep all the questions coming in. We've got another question from one of the attendees. So what's the difference between purchasing directly from Techemynt and from Dasset?
Great question. So Techemynt is geared to be wholesale. So we're a financial service provider licensed with the Financial Markets Authority, and it's not practical for us to deal with retail at the Techemynt's level. So we have a 100K minimum sign up. Now, for market makers, institutional investors, arbitrageurs, so on and so forth, they want to have a direct account with the Mint. They can call the Mint, or more specifically, go and log in and redeem as much as they want or buy as much as they want through a nice tidy portal that we built. There's a 100K minimum, and you need to qualify as a wholesale investor. And so Dasset has no minimum and is designed for any amount and fast, effective deposits and withdrawals. So it really is just a preference. If you need an account with the Mint, I'm happy for you to come and apply. It's 99% of people are going to get an account with Dasset and then just buy it off the market and withdraw it to the bank account from there, or their wallet, depending which way around you're transacting.
Great. And is NZDS going to be available on any other exchanges? And a follow-up question would be, the expansion of NZDS onto other exchanges won't change the value of NZDS, obviously, but will it reflect good returns for liquidity providers? I guess as more people enter the pool, how does that work?
Sure, yeah. So we're talking about different tracks, and internally we have a business development team that is focusing on wallets, payments, remittance, all of those types of partners. TradeFi fits into there. That's a whole stream of work, and there's a whole series of partners that are interested. Some don't even need to call us, and they're just integrating it without even having to communicate with us. Again, it's the open source nature of this technology. But yeah, we're very excited about the wallets and the payments in some of those areas. We can't name names, but over the next 6 months, we're going to see a lot of usefulness, right? So again, we already have the ability to say, hey, Hugo, here's that 20 bucks a year. Boom, done, instant. That's going to open up and become even easier to do for various different wallets and their various different user experiences. Then we have the centralized exchanges, the Binances and Bitstamps and Bitfinexes and all the big cryptocurrency exchanges. Turns out they want to offer NZD-based Bitcoin and Ethereum and Ripple and other assets trading. So owning and operating Techemynt and being the co-founder of Digital Asset Exchange, it makes a lot of sense for a New Zealand exchange, which is what Dasset is, to be the first to offer Bitcoin and Ethereum and other assets against NZDS. I hope that in the future, what happens is you're trading with an NZD balance, and that's how it's displayed on all of these growing number of exchanges. And then when you withdraw, it simply says, do you want to withdraw tokens or a wire transfer to your bank account, right? It doesn't actually differentiate between NZD and NZDS when in the context of your trading activity. And then the third track is the DeFi track, decentralized finance. And that's a lot more niche skills are involved. So we've got some assistance out of Blockchain Labs, which is another sister company we created. I'm happy to say that for those that know what it is, we set up a Curve factory pool the other day. Curve is a multi-billion dollar DeFi platform. And allows people to come along and mint NZDS. They need to have some NZDS in the first place. It's easier to explain for a diagram, some of these, but yield comes out of it, right? All yield is based on transactional activity. If you're swapping from NZD to USD to euros to whatever, or if you are borrowing, you are lending, or just trading on the different markets, right? There's going to be a difference between NZD USD and the BTC NZD and BTC USD. And so somebody will come along and arbitrage that and extract yield, and then they might offer a return through a growing number of DeFi solutions as they need more capital to cycle through and arbitrage larger and larger amounts over time to that'll create an efficient market at the end of the day, thankfully, as well. So the DeFi solutions, we're talking to everyone. We can't say who is going to be live with what when, but if you know them, assume we're already in discussions with them, from Nixo to Crypto.com to Aave to Yearn to all the big ones. And some of them will come along and say, look, here's 10% flat, right? And there's a different risk profile. They'll just offer you a set rate, and then they'll extract yield out of borrowing and lending and probably arbitrage. And they'll just offer you a set fee. In fact, Techemynt is happy to offer 8.5% if you don't want to deal with keys and coins and anything like that. We will be making a lot more than 8.5% on that capital, and we can't offer that to more than a couple of $1 million at a time. But it's all very exciting because there's just so much opportunity in both the centralized and decentralized directions. So we're tackling them all, and we hope that you'll see a huge amount of use and NZDS available in just more and more places popping up over the next 6 months.
Great, that's really exciting. Thanks, Fran. Is the Curve pool live? So there's a viewer who's...
I don't think it's public. I'll need to get back to that, but as with all these things, they need to go for QA, testing, liquidity cycling. Market maker needs to plug in there. So you might want to check out Jarvis.network. They set upon themselves to create this Curve factory pool, and they will be acting as a bit of a, broker in the background, where they buy NZDS from us directly through the mint, and then they make it available as a balance inside the Curve factory pool, and people can come along and quasi-mint NZDS using various different types of collateral. It's not actually expanding the total circulating supply of NZDS, right? Just want to stress that. But we'll dig up a link once it's live, and there's going to be, on LinkedIn, Twitter, Telegram, as well as email distribution for those on their newsletter. We'll be updating every time there's something that is live.
Great. And I think we've got the last question for now, a bit more targeted towards DFX. If we stake, say, 50,000 NZDS, when does it pay out interest, and will it be NZDS? So the answer to the second half is it will be in the DFX token, right? But when does it pay out interest?
So DFX, let's go to the website right now. DFX.finance. I'm just going to go back to screen sharing real quick. Okay, so this is DFX.finance. Again, third-party website. We don't own and operate it. We just really like these guys. They're exceptionally well backed. This is where the magic happens, right? You can swap between different currencies, USD to whatever token, the NZDS, any amounts, and there's a small fee that's generated, and that's how the yield. That's effectively with the source of the yield. And you go to pools. You go to this tab here, and you get to see how liquid each of them are, right? So there's 5 million bucks in the Canadian USD pool. There's 6.7 in the Euro USD pool. And what are we sitting at here at 5.4 mil US in the NZD USDC pool? Now, this is 53% NZDS and 46 point something percent USDC. So ideally, you would actually on Dasset, right? This is getting into the granularity. You buy exactly those percentages. So you take your $50,000 that you're willing to use, and you would buy those percentages on Dasset. You would withdraw them to your wallet, and then you would stake them by clicking Add Liquidity. I can't show you that right now because I'm not logged in with a wallet. I don't travel with private keys. And then there'll be a screen there that'll show you, your $50,000 worth of NZD total value between your USD and NZD coins. How much of the pool share will you receive? And then the payouts are like block to block, basically. So they're just streaming continually. So there's no lockup period. You could check it every 5 seconds. You could refresh it, every 5 seconds to see how you're going and how much you've accumulated. And then it'll just update and it'll display in real time. This is your interest in what you've accumulated. And then you can withdraw with 2 or 3 clicks, anytime you like. Obviously, you might want to leave it for a couple of weeks so that you're at least earned more than the cost of any network fees involved with depositing and withdrawing and transferring and all the rest. But yeah, again, the Dasset and Techemynt team are more than happy to sit people through how to get set up and use these platforms. And lastly, please keep in mind, DFX is awesome. They're just the first major partner that's offering strong utility for our NZDS products. There'll be many more.
Great, thanks for walking us through that, Fran. I guess that's the end of the question. So any last words or closing remarks?
Look, from my end, I'm really excited about this business. It's a pleasure operating this business. You call major brands household names in the crypto industry, and there's no we'll think about it or we'll get back to you. It's just great. When do we integrate? Like people understand it. They're like, oh, great, a New Zealand dollar stablecoin. Is it a scam? No. Look at their white paper. They're audited by EY, so on and so forth. Perfect. Known founders, public figures, have been out there for 10 years in this industry. And, we're already being asked about, can you tokenize gold and silver and other currencies, so on and so forth. So I think that this company and product is going to grow phenomenally well. There's so much I want to share, but it's just too early. So please sign up to our newsletter, and we'll keep you updated on all that. Sorry, I just see somebody asking about the Luna collapse. The short answer is I saw that coming from a mile away. I said months and months ago, just don't touch it, and most of our staff didn't. Because one does not simply take a magical internet coin and stuff it into the stable coin as collateral, right? That's insane. I couldn't believe that they went up to $40 billion in value and nobody kind of was ringing the alarm bells there. So that's an algorithmic stablecoin, right? We wanted to have the gold standard of no monkey business, just one-to-one. There's $1 for every token. It's physically impossible to experience a cascading liquidity disaster like Luna at our end. And we will be making sure that all of our future products are also, no fractional reserve practices either.
It sounds like staking NZDS on DFX is risk-free. Is that truly the case?
So absolutely nothing in this world is risk-free. That's the first thing to state. It's important to understand what the risk is. So let's just go through it step by step. So firstly, to enjoy receiving yields, right, you have to stake NZDS and USDC. You need both ends of the pair, right? And so you are exposed to the USD NZD FX fluctuation rates, right? When you withdraw, you crystallize. You might end up with more of one than the other because they ebb and flow. Luckily, that pair, New Zealand is the 10th most liquid forex pair in the world. and that is the quantifiable risk components. So that's one, the FX rate between NZD and USD. Two, there's the value of the DFX token. So for example, DFX listed on Coinbase a couple of weeks ago. The yields ballooned to 88% per annum for about a week. And so obviously, if you sold your yield at that time, you would be netting a larger amount. But anything double digits outperforms current interest rates that are available through the current banking system. So there's that risk to consider. And finally, you have platform risk. So will DFX be hacked or go down? Now, we are comforted by doing our own technical auditing and seeing their third-party auditing, as well as some very large names like Andreessen Horowitz and others investing into their platform. Now, you can mitigate that risk by buying insurance against your exposure that is available for a number of third-party providers, and some of them are exceptional and very quick. So that's the risks as we see it. As there are risks on NZ dollars in the first place, well, that's a whole different field of discussion, right? Going through the questions there, Hugo?
Yeah, sure thing. So someone's asked, are there any differences in fees in going to Dasset, e.g. with $50,000 versus directly with Techemynt with $100,000?
Dasset, being an exchange, will charge you a small transaction fee on any and all transactions. So naturally, you would end up with a, you buy $100 worth, you're going to get 99 point something dollars. It is 100K minimum requirements just because it costs us money to actually KYC and AML people. And that's more expensive to do for trusts, companies, and wholesale users, which is what Techemynt focuses on. So hopefully that answers that initial question.
So we've got another question, which is, can I get my money or tokens back at any time? So can we withdraw NZDS?
Yes, absolutely. You can withdraw NZDS from DFX with, I think, 2 or 3 clicks, right? So you sign in for your MetaMask, you get to see what you're currently earning. Right now, the yield rates are about 18-20% or thereabouts, and they have been for the last few weeks, despite the downturn in the crypto space. That's still pretty good. But yeah, the short answer is that's the whole point. It's your keys. You look after it. You get to withdraw it whenever you choose to do so.
Sure. So we've got another question. How do you see the stablecoin market maturing in the next few years in terms of adoption of stablecoins in retail and commercial settings as a means of payment for goods and services in New Zealand? I'm sure you've got some insight in terms of having undergone the regulatory and financial steps for setting up NZDS here with the FMA.
I'm glad somebody asked that question. So again, that major shift between how foreign swaps are done and how international payments and remittances done, and even domestic payments are done, that is vastly shifting. So as time passes, more and more value is put on chain. It's tokenized, it's digitized. Once something is digitized, it just makes it an absolute breeze compared to the analog old system to perform whatever actions it is that you want it to do. So again, we pay a lot of contractors internationally with stablecoins, and we will go to Dasset, we will buy some USDC or NZDS, and we will then just withdraw it and pay it to our contractors, and they receive it within seconds. And typically they give us a deposit account on their exchange, their preferred exchange in whatever country they're in. And so we see a lot of disruption for cross-border payments and remittance. It's that each platform where you go back into the banking system, when you receive your stable coins and sell it down and send the wire transfer back to your account, that's where compliance occurs. That's how the system stays clean and compliant. So we see FX markets and international remittance just by virtue of being far more efficient using stablecoins, being one of the first major trillion-dollar international markets to be disrupted. And it's already begun to happen. So our job at Techemynt is to make our NZDS product, the first product, as useful as possible. So DFX is only the first major integration that brings a yield. For those familiar with, big DeFi brands such as Nexo and Crypto.com and Aave and Yearn and Curve and all of the above, if you're technically inclined and you understand how to extract different types of yields for different strategies and stable coins, this is like a playground for you. So yeah, it's hopefully that answers your question, but we see at least 10 to 15 years of all value being digitized, starting with different currencies, and then commodities as well, gold, silver, oil, etc. As long as you can find a good custody solution, then it makes sense to tokenize it, because it just becomes faster and more liquid than having to go through the conventional plumbing and piping. I see a question about the anchor yield was inflated by TERRA. Can you guarantee that 18% is not similarly inflated? Again, DFX is not our platform. It is a current partner that we have vetted. You need to do your own due diligence on them. You can buy insurance against platform failure. But in terms of their emission curve, the yields that it's generated, that's done by a governance vote on, I believe, a quarterly basis. So they'll ask their community, do we want X amount of yield on the USDC NZDS pair? And DFX token holders will vote on what that will be. And they will look at how many transactions are occurring in this pair, and therefore how many fees are buying DFX token off the market. So how can we justify that? It's a nice ebb and flow between how much people are using these swap facilities versus what yields are being generated. And we expect the whole sector of decentralized FX swaps to continue exponentially growing. So that should perform really well for DFX, and we'll simply see a higher velocity of money and more transactions, and therefore stable-ish yield, should I say. But it's not guaranteed. It's subject to a governance vote. So we are actually incentivized to accumulate as much DFX as possible, so that we can vote on making sure the yield for our pair is as high as possible. And we've seen these strategies for VCs in the Curve ecosystem. Something like 50% of all Curve in existence is owned by a small group of very large funds, because they accumulated it to vote on the yields being as high as possible for the instruments and products that they prefer on their platform. It's a very, very elegant mechanic. I just see a question come in saying the fate of NZDS is linked with Techemynt. Well, we make it useful as a business, as we're incentivized to make it useful. We're not worried about the funding of Techemynt. The operational costs are actually incredibly low. Plus, as I stated, we're going through a very large funding round that will help us increase the assets under management and the liquidity and the market making. But outside of that, we have something like a dozen major integrations signed up. It'll take months to activate all of them. So there's a very fruitful future for NZDS. It'll be available on wallets, in payment apps. You should theoretically be able to pay for things with perhaps a crypto balance, and NZDS is part of that. And the merchant gets dollars in their bank account as per normal. There'll be multiple different places that offer different types of yields. So some places will offer you, a flat 8% rate for a 12-month lockup, and they will take your NZDS and extract yield from arbitrage and borrowing, lending, and rehypothecate. It's a different risk profile to an automated market maker like DFX, or decentralized FX market, and the way that capital is not needed to be rehypothecated and speculated with. So there'll be more and more options to use it every day, to earn yield out of it as time goes by. And the Techemynt business is sufficiently capitalized to last for years and years and years. And in the event that for any reason that it goes bankrupt, there'll be a period where everybody just simply gets to redeem their NZDS back to their dollars in their bank account. As again, it's a separate P&L. Now, I do want to stress that NZDS is our first product. We have our eye on several other products. We'll be doing some market sounding shortly to figure out where the demand is. We see some interest for an Australian dollar stablecoin, JP stablecoin, JPY. We see gold and silver is very exciting because never has it been possible to earn interest or some kind of yield, sorry, on your gold that's held somewhere. So we have quite a few exciting products lined up. I'll just tackle some of these questions that have come in here, Hugo. WRT to governance voting, do you declare your holdings in token? Can investors delegate their votes to Techemynt? I'm not sure what WRT is in this context, sorry. If you're talking about the governance voting on the FX platform, we don't have a facility at this time to what do you call it, receive delegated votes. You can go to dfx.finance in the governance portal and directly vote with whatever voting weight and power that you have in your holdings. Will NZDS be available on other platforms such as crypto.com? Absolutely. So again, we have a tremendous pipeline lined up. Working on business development at Techemynt is actually quite a joy. There's very little gatekeepers and friction. Everybody's simply like, great, this is a fantastic idea. When can we integrate? What can we do together? When can we do it? Can we promote together? So the short answer is yes. We can't tell you exactly which platforms it'll be available on, but from what we can see at our end operating the business, there is many different partners that are going to integrate NZDS and our future products, not just NZDS, over the coming months. In fact, we've just tried the ink on some fresh paperwork for a new decentralized exchange. More and more options, and it'll be visible. So we encourage you to subscribe to our newsletters and keep an eye on the Techemynt Twitter accounts and so on and so forth. I think that's all the questions. Look, in closing, I think Techemynt's a clear trajectory towards unicorn status. We're going to spend the next decade tokenizing all kinds of currencies and commodities. The demand is certainly there as the world itself realizes that things are just faster, cheaper, more auditable, less systemic risk when you digitize it using the blockchain, right? And the world's going through a major global restructure of which nobody alive has witnessed before, right? The shifting world order, questioning of what is value and what is currencies, with major economies, particularly the BRICS nations, choosing to back their respective currencies with a wide variety of hard assets, from gold to fertilizer, so on and so forth. I think, this is going to take time to transition to a new order globally, but effectively we will slowly but surely return to sound money and sound fiscal and monetary policy. It's an exciting time. We're going to see a lot more pain over the next few months, but I'm a pessimistic optimist. I do think things are going to get incredibly better, powered through this revolutionary blockchain technology, and couldn't be more excited about Techemynt and blockchain and where everything is going. So hopefully this brings you a broad brush overview of why we chose to undertake building the Techemynt business, tokenizing the New Zealand dollar, gold and silver and everything else to tokenize, where things are heading in the future. And, the most important investment anybody can ever make is spending the time to understand this technology, because money and value is changing fundamentally in terms of what it is. And you don't want to be the last one to understand it. Somebody just asked me if there's a prediction for the bear market. Technically, we've been in one for 12 weeks already. I don't think we're going to get sort of, back into 4 digits or anything crazy like that on Bitcoin. But you have pictures of cats on the internet called NFTs and other crazy things with no intrinsic value, with multi-billion-dollar valuations. And the industry has a knack to simply wash this out every 4 years, right? Overvalued stuff, it just gets washed out. And then resume regular programming as people realize the programmability and the scarcity and predictability of blockchain assets.
Great. I think that's it for everyone and no more questions. So thanks everyone for tuning in and we hope to hear from you guys soon.